we communicate with shareholders of all sorts. We had a lot of retail shareholders calling, as you may appreciate. Warner has a lot of retail shareholders, including former AT&T shareholders who now own Warner. And then there are institutions and ARBs and hedge funds. So there's a lot more to come. But it's a win for all. If I think differently, and if I give Warner some credit for a great movie this year, for us, it's been one battle after another.
What an incredible film.
It is really good.
Absolutely. And we have been busy with not just this situation, but so many others, whether it's on the activist front, representing some companies who are going into proxy season, and we've had M&A, and there's a lot of other contested situations that have happened, friendly deals where investors want to check on the price that's being offered. They want to talk about process. They want to make sure that they're getting value like they're going to be getting here at Warner.
First of all, I went to see that film twice in the theater. And I wonder if Paramount hasn't, much like the assassin in One Battle After Another, bitten off a little bit more than it can chew, because they're taking on a lot of debt to make this happen. Now, I know that they need to do that. All the media analysts we've spoken to have said this has to be part of the plan. They have to have Warner Brothers to succeed, and that looks like they will. But how much money are they going to have to make to cover it?
That's not for me to talk about today, Matt. There's a lot to come out, and I know we are working with some of the smartest people in the business.
What about the Netflix side of things? Because this is a company whose shares had been hit really hard on this. Again, putting on not necessarily your Paramount advisor hat, but your proxy advisory hat. Do you think this would have been a company ripe for an activist to come in had they actually gone forward with this deal?
Well, appreciate that Netflix is a large company. Their shareholders do care about the situation. And if you look at shareholders, largest shareholders of Netflix, you look at largest shareholders of Warner, Paramount, there's a lot of cross ownership. And each of those companies would have heard from their shareholders. That's what happens in every situation. The shareholders have opinions. Part of our job is to help our clients understand who those shareholders are, how they think and behave about situations, put our clients in communication with the shareholders so that they can make the right decisions, so that they can execute on the deals that they want to do. And that's certainly what's going to happen here.
By the way, have you noticed that Danny Berger has a new deals show? Every Wednesday at noon, an hour-long show focused solely on M&A, because it's such a busy time right now.
I know that, and I've been watching. It's great.
What do you think? Obviously, it's the start of proxy season, so we're starting to get these various things coming in. I know you work with Elliott as well. They're looking at Norwegian cruises. What do you think the play is here? Because this is a firm that doesn't necessarily like to go all the way down the road of the proxy fight. What do you think the ultimate end game is for this?
Well, I don't know that I would characterize any activist as a firm that's unwilling to go and have a proxy fight.
Right.
The reality is that when an investor like Elliott, who is very smart, very sophisticated, wants to look at a situation, they've done their homework, they have a thesis, they're presenting that thesis to management, to other participants, to shareholders, and if they need to have a proxy fight, they have a pretty good sense that they have a possibility of winning, a probability. I mean, we help them with that, and we help them understand whether or not they're going to win. We've worked with a lot of investors over the years and companies where we lay out the odds and say, you're not going to win or you're going to win. You have to really know what's going to happen with the different shareholders. But ultimately, it is about value creation. And whether we're talking about cruise lines, shipping container companies, dry bulk companies, whether we're talking about entertainment and media, oil and gas, there are so many sectors where we have this uncertainty in the market, and companies need to articulate their plans to their shareholders, or they're going to have investors speaking up saying, you need to do it a little better.
So what have you heard? What has been the reaction from shareholders? Let's just take Elliott Norwegian as an example. Have they been pretty welcoming that, yes, this is a company that needs an injection of life?
you find almost every time that Elliott comes into a situation, the shares go up. So the reaction is almost immediate. And that kind of reaction is what helps a company understand whether or not there's something to be done here. Now, we work with a lot of companies too, and we help those companies understand and appreciate whether what an investor is saying is worth pursuing more. And frequently we find that the good ideas come from management, boards heard them, but also these shareholders. And other shareholders will then amplify what an Elliott is saying, and that's where you end up with potentially the value created from investors speaking up.
Bruce, you have so much experience in this arena, and from Cravath to Columbia to Okapi now. I can make a comment or try and compare and contrast the regulatory environment under President Trump and President Biden, but I don't know it as well as you do. Is it really as stark as I would have thought?
There's a lot of differences in how all the participants are looking at transactions now. We worked on a number of situations during the Biden administration that frankly were hard to get done or didn't get done. We worked for Spirit Airlines, and so you talk about a situation that maybe should have been done with Frontier.
It feels like nothing got done under the Biden administration, and everything can get done now. Is that?
I mean, when we're talking about things like Stripe buying PayPal, like two direct competitors, it feels like deals are being dreamed of that never would have happened before.
And probably to the benefit of investors and to the benefit of the markets in general. That's the exciting part of what we do. We do talk about how we communicate these deals to investors who have the same kind of questions that you do, Matt. Is this something that can achieve regulatory approval? When is it going to happen? Should I be buying now? We don't make investment advice. We don't give investment advice to clients, but we help them understand the timing and what could happen next.
All right, very cool. Great having you on. I hope we can get you back, or maybe you'll go on Danny's Deal Show.
We'll take both. We'll happily take both.
Danny's Deal Show, Wednesday at noon. It's a do not miss if you care about this environment. Okapi Partner CEO there talking to us, Bruce Goldfarb, about not just Netflix and Paramount, but about M&A in general. Less than 4 minutes to the opening bell. We begin the trading day with Anastasia Amoroso. Stay with us for that because futures are down hard. This is Open Interest.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 60-65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Take a look at futures because in a month that's already looking like a loss, they're down 1% on the S&P right now. NASDAQ futures down even more, and the small caps down 1.5%, even as the 10-year yield comes in below 4%. And Danny tells me this because PPI was just too high. You see here, well, that's Jim Neeson. He's the managing director and founding partner at the Connor Group. Great guy to ring the bell today because they're holding an IPO summit, and that's what the NYSE probably, definitely, absolutely wants more of. They're getting one down at the NASDAQ. Generate Biomedicines ringing the opening bell, raising $400 million in an IPO, so that will start trading today. Danny, there's a lot going on in these markets.
Yeah, and a lot going on that we're freaking out about, that we're
Yes.
like, there's, fires to be put out. I mean, whether or not
this story, by the way, that you're about to show us is the perfect end to a week that started with Citrini research, right?
That is actually so well put. Of course, this is the logical conclusion that you get a warning that maybe the white-collar labor market is going to be completely different, and then you have a company saying, yes, that is what's happening, and that's what we're doing. Block cutting 4,000 jobs. Jack Dorsey saying that AI can replace those workers. But Matt, we talked about this earlier in the hour. There have been many who have said this was a bloated company and they would have needed to make those layoffs anyway. And maybe AI is a convenient excuse. Whatever it is, shares are higher by 17.33%. So, or now 18%. So maybe this is the model to follow. Your shareholders will reward you if you cut a whole lot of employees and say it's because of AI.
Right. I mean, he also raised his profit forecast at Block. So that doesn't hurt. OpenAI announced a strategic partnership with Amazon to bring more models to AWS customers. Amazon will invest $50 billion in OpenAI, which is now valued at $730. I think in total they got $110 billion of investment, and they're going to buy some Trainium chips, which is the part that I find interesting as well in the battle to see if anybody can catch up with NVIDIA. Let's bring in Anastasia Amoroso, Partners Group Chief Investment Strategist of Private Wealth there at Partners. Anastasia, great to have you here.
Good morning. Good to see you, Matt.
You know, last time we had